Hello everyone, welcome to my channel again. My name is Ellen. I am going to share with you my experience with the first ever pre-IPO deal that I have attempted. The private market is definitely a booming area. The last asset manager I worked for was just starting to tap into the private market about a year or two ago. So this area is definitely getting traction, not just from individuals like you and me, but from institutional investors too. I think it's going to be a more and more popular investment vehicle. And I have been doing a lot of research in this area as to how an individual like me could access private market as well. And I cannot wait to walk through my recent experience on this pre-IPO secondary market platform called Hiive and my attempt to invest into Groq through this platform. I recently made a video on Groq and its potential for investors. If you haven't watched my previous video, please feel free to check it right over here or here. Before we get started, let me just clarify that I am not associated with Hiive in any way. This video is purely based on my own experience and my own independent opinion and assessment. I'm not getting any commission or any reward in any way from Hiive so that I can give you my honest opinion. Okay, without further ado, let's get started. So initially, I found Hiive through my research on ChatGPT. I have been aware that pre-IPO companies potentially has more upside than the already public companies, especially given the current AI boom, or some people might call a bubble. Similar to the internet age back in the 90s, a lot of IPOs made a lot of money. It's not guarantees, of course, and there were lots of losses too. But I wanted to look into this particular area of investment as it may provide a nice diversification for my portfolio, because private market differs from the public market in that there is a lot less information flow out there, and also accessibility is different too. So I asked ChatGPT which private market platforms are the best to buy pre-IPO companies. And Hiive is one of the platforms ChatGPT recommended to me alongside Forge Global and Equity Zen. These platforms all share a similar nature in terms of being a brokerage platform, facilitating secondary market deals between existing shareholders of these private companies, such as early investors or employees who have been awarded shares of these companies, and to new investors who wish to invest in these companies but do not have access because they are not an employee or there aren't any live funding runs. So the only way for these investors to access shares of these private companies are through the secondary marketplaces. Do keep in mind though, through these platforms, you're often not buying the shares directly from these existing shareholders. Instead, you are investing through a special purpose vehicle. So instead of holding the shares directly, you will hold an interest in this special purpose vehicle. So the first private company that caught my eyes was Groq Inc. It operates in the AI inference market and is a booming chip maker making waves and catching attention in this space, even labeled as a challenger to NVIDIA. If you want to learn more about this company's fundamentals and background, check out my previous video right over here. Interestingly, I initially heard of this company through one of the episodes on Diary of a CEO. It was Steve Bartlett interviewing Cathie Wood about the market movement in the next 1 or 2 decades, I believe. And both of them mentioned the company Groq. Steve on this show confirmed he's a shareholder of this company, and Cathie Wood has her famous ARK Invest venture fund also investing in Groq. Then I made a note of this company and started looking into its background and fundamentals. And the more I did research into it, the more excited I was getting about its upside potential. Remember to do your own research though, don't just take my word for it. So on Hiive, you can very easily sign up with an account. However, you do need to confirm and self-certify your accredited investor status. This means either you meet the income threshold, $200,000 per year as an individual, or $300,000 per year as a couple. Alternatively, if you have a net worth of over $1 million US, excluding your primary residence, you would qualify as an accredited investor too. This may become a barrier for many people because these private market deals are still considered as high risk, so it's not for every retail investor. You do need to be able to allocate your assets according to your risk tolerance. The verification process for your accredited status was quite straightforward on Hiive. I didn't have to provide any particular documents or official certificate, but it was done on a self-certification basis. So I answered a series of questions and confirmed how I meet the criteria for accredited investors, and then I was able to move on. However, I believe some of the deals, if you would actually wish to participate, would require actual document evidence at the time of entry. And once you're logged into the platform, you will be able to see a section called Investment Opportunities. And there you will be able to find private companies' shares being offered through single asset funds. These are special purpose vehicles structured by Hiive. On the other hand, you can also find secondary shares offered by existing shareholders, and you will be able to buy from them through Hiive as a broker. But these two types differ from each other. I haven't attempted to buy any secondary shares from existing shareholders, but I did participate in a deal through a Hiive structured special purpose vehicle. I was notified of this opportunity to invest through a single asset fund on Hiive by one of the regular emails I received from the platform. Once you register on Hiive, you will receive notifications of new funds being offered by Hiive. You will get some background on the fund structure, what type of shares it is, what's the unit price, and what's the minimum threshold for investing in this fund, as well as how many units of the fund are being offered. As you can see here, this is the deal I was participating in. It was a single asset fund being offered by Hiive, and here shows the price of $34 per unit, and in total there were 408,650 units being offered. One unit would equal to indirect exposure to one share of the underlying security. It says indirect because, as mentioned before, these deals are offered through a special purpose vehicle, so you won't be buying the shares directly, but it would be an indirect exposure through a unit of the fund instead. And the share type was the preferred shares, which if you watched my previous videos, you would understand preferred shares of the private company are usually much better than common shares. It comes with much more rights and priority when it comes to liquidation. So this is the information you would get if you are looking at a deal on Hiive. It explains what a Hiive single asset fund is, and listing notes here as well. So it mentions it's a single asset fund. However, the underlying structure could either be dual layer structure or single layer structure. That means either the fund holds the shares of Groq directly, or it holds another fund, i.e. Potentially another special purpose vehicle that holds shares of Groq. As you may have gathered, the more layers there are, the riskier it becomes because you are dealing with multiple counterparties, and the complex structure could mean multiple fees being charged from the fund as well. So it's definitely something worth looking into. At the time, I had several phone calls with employees from Hiive to ask these questions, and they explained the structure to me. It also explained here the target minimum investment is $50,000. That means you need to commit at least $50,000 in order to participate in this deal. On top of that, there is also a 5% brokerage fee. The deal I participated in, didn't involve any management fees or carried interest by Hiive, but it just had a one-off brokerage fee of 5%. Since it was my very first deal, both in the private market and on Hiive, I didn't just have to do due diligence on Groq as a potential investment, but I had to do due diligence on Hiive as a platform too. I looked into the founders, the team behind Hiive. I spoke to at least 2 people sitting behind the deal desk at Hiive to ask more questions, both about the deal, the fund structure, and about Hiive, how it works as a company. And I watched various interviews about the founder in order to get more comfortable with the legitimacy of Hiive as a platform. I didn't find any red flags online through my research, but it didn't make my anxiety go away completely, because you just never know. And these days you do these deals online, you never really meet anybody because it's very international. I believe Hiive's founders are based in Canada. However, they offer investment opportunities to investors all over the world. So I couldn't actually meet anybody there, but I think in addition to the online research I did, the most reassuring part to me was speaking to the people behind the screens and email communications with them, and also how reliable they were at calling me at the time they said they would call me. I have to say they were patient, they were honest and open about the platform and the deal I was interested in. I had a couple of phone calls with them, which I requested, and I spent about 1 hour on each phone call with them, asking questions and drilling down to the details that I needed to know. One thing I was a bit surprised by was that I couldn't find fundamental details of Groq as a company, such as its cap table, which is the table that shows the existing shareholder structure, or the specific terms associated with preferred shares, especially the preferred shares that are being offered through this existing deal, because there are various series of funding rounds in the past already, and the preferred shares offered could be from Series A or Series B or C or D, etc. But it wasn't very clearly stated. In fact, on the platform, it said preferred shares A, indicating it was from Series A. However, when I spoke to the people from Hiive, they asked the fund manager directly, and it turns out the preferred shares offered through this fund were actually from Series B and C instead. So there were some details that I needed to clarify, and I wouldn't have been able to be sure of without speaking to the deal makers behind the screen. So if you were interested in pursuing a deal on Hiive, that's definitely something worth doing before you commit your money. And in relation to the cap tables and the details of the preferred share structure, I managed to find that information through EquityZen instead. I also spoke to some people who worked for EquityZen. However, they weren't offering any funds that hold Groq shares at a time, so I couldn't invest through them, but their platforms seem to have much more details about individual companies and presented in a very organized way, as you can see here. Another thing I hoped to obtain from Hiive was official documentation like Form D or the certificate of incorporation for Groq. That would have been a very useful source of information. However, I was told that they don't have access to such documents and information. So eventually I ended up getting hold of that document through ChatGPT, which is amazing. I was really delighted to find that information. But it was a bit surprising to me that the employees of Hiive weren't able to help me with that directly. I guess it's a reminder that Hiive is a broker. They are not financial advisors. You need to do your own research and decide you want this deal, and then they are there to facilitate that deal and help you participate in it. But the decision is ultimately yours alone. Then it came a very nerve-wracking stage once I felt that I've done enough research, and to be honest, it never feels like it's enough, but at some stage, you have to make a decision, and I reached that stage. A caveat, though, was also that I felt some time pressure about this deal on Hiive, because Groq has been really popular amongst private market investors. And that was confirmed both by accredited and by Hiive and by a lot of articles I've read. Hiive was the only platform offering its shares in this way, and they were looking to close the fundraising within a few days or maximum a week after I started seriously looking into this investment opportunity. So I did feel some time pressure as well. However, I felt that I really dug into this opportunity enough to be able to decide that on balance, this is potentially a good investment, bearing in mind that I must be prepared to lose all of my capital and be okay with that. That is a really good test to run on yourself before any investment. I knew it was unlikely that I would lose all of my money because this fund was offering preferred shares, and from what I read in the certificate of incorporation of Groq, any series of preferred shares had this 1x liquidation preference attached to it, meaning at the event of liquidation, if the company was sold for less than its original price, the investors would at least get back their money that's equivalent to the price paid by the original investors. For example, I was looking to buy these preferred shares from Series B or C funding rounds. Although the price asked of me was $34, the original investors paid much less than that. So if it comes to it, those preferred shares should at least be worth the original price those investors paid for. Of course, that also depends on Groq as a company being sold at least for that original price. If it's sold for even less than that, then investors would get back even less. However, in any case, there is much more of a protection for preferred shareholders than common shareholders. For common shareholders, you just wouldn't get anything if there isn't any money left after all the creditors have been paid and all the preferred shareholders have taken their share of the money. Okay, so back to the most nerve-wracking part of the journey, wiring the money over. I used my Wise account. In addition to the $50,000 commitment, I also had to add 5% brokerage fee to the amount being transferred. I believe Wise charged me about $2 for that transfer, so not much at all. And I provided email confirmation and screenshots of the transfer to Hiive by email straight away, and they were able to use that as confirmation of my commitment. I was then monitoring the platform's deal page on a daily basis. It only took a couple of days for the status of my funding to show up on the platform, which was very reassuring. So essentially, I wired over the money on the 17th of October, had the receipt confirmed around the following Monday, 20th of October. Although before the confirmation, there was always part of me that still suspect that this whole thing might just be a scam and something might just go terribly wrong with all this. But I knew that was more or less an irrationally fearful part of me, which is probably shared by most of us when doing something new and exciting and hopeful but unfamiliar, even after doing all the due diligence you can. And once the receipt of my funds was confirmed on the Hiive platform, I was much more reassured that the deal was going ahead. And although there isn't any guarantees, I felt I was taking a bold step in a direction with calculated risks, but overall, an investment in a booming industry into a company that is a rising star. Unfortunately, the excitement didn't last very long. On the 28th of October, so about a week after the receipt of my fund was confirmed, I received an email from Hiive notifying me that the deal for Groq was oversubscribed. So given that the funds were taken on a first come, first served basis, and my funds were one of the later ones to arrive, I actually missed the opportunity to invest in Groq altogether. They were therefore going to return my funds, because how the funding process works is that the potential investors would sign the agreements, commit their monetary contribution, and wire over the money before the closing of the funding rounds. However, at that stage, there is no guarantee that you would be participating in the actual deal. You're merely confirming your commitment to this investment, because after gathering the fund, Hiive as a platform also needs to receive approval from Groq as the share issuer. Sometimes that part could fall through, which Hiive employees did warn me about. And another reason why you may not be able to participate in a deal is that the deal could be oversubscribed. To me, this confirms that Groq was a very popular deal. A lot of people wanted to invest in it, and the offering was at a good price because I saw a lot of other bids and asks on Hiive's secondary market for Groq that were at a much higher price. I saw some prices at as high as $56 for common shares and not preferred shares. So in comparison, $34 for preferred shares looked like a pretty good deal. So when the deal was oversubscribed, I felt disappointed as well as a slight relief, because you never know with these things. There is no guarantee in life, especially in the life of an investor. So I might have missed out the biggest gain in my life, or I could have really dodged a bullet as well. So who knows? I felt part of the investment process, especially in this case, was trusting the fact that if it's meant to happen, it would happen. So in this case, it wasn't meant to happen for me, but I still learned a ton from this experiment, and also it really strengthened my understanding of how the private market funding round works. So next time when I try to participate in a private deal, I would be a lot more confident. Finally, as you know, I was notified of the oversubscription on 28th of October. I was told that the funds would be returned to me, but by 3rd of November, I still hadn't received my fund back. So I chased Hiive by email and very quickly got a response. So 2 days later, on 5th of November, it was confirmed to me that the finance team at Hiive was processing the cancellation of my subscription, and the funds would be returned on that day. As I expected, the very next day, so 6th of November, I received my fund back, the full amount, including my commitment of $50,000 into the fund itself and the brokerage fee attached to it. So the only fee I paid for throughout this whole learning experience was those $2 of transaction fee via Wise, which is not bad given how much I have learned from this experience. And also the fact that I received my fund safely back tells me that Hiive is truly a legitimate platform and it's trustworthy. So if there are appropriate future deals on this platform, I would again be interested to participate. So there you go. That's my experience on using Hiive to participate in the private market. What do you think about this whole process? Have you also had experiences of trying out similar platforms or Hiive itself? And what has it been like for you? If you care to share, I'd love to read it in the comment section. Thank you so much for watching today. If you enjoyed the video, don't forget to hit the like button and subscribe to my channel so that you can see more videos like this. And as always, don't forget to share this video with anybody who you think might benefit from this content. It really helps me grow my channel. Thanks again for being here. I will see you next time. Bye for now.